Welcome to a new episode of Tradomics. My name is Dario, and as for the first page, we're going to analyze the most prominent US tech stocks. As usual, we start with Microsoft, applying our methodology, the T cycle analysis. So, on Microsoft, according to the last video analysis, we said that we were expecting a further move to the upside because we were about to close an upward cycle. But in this case, completed the first T plus so weekly cycle after 10 days. So after the first upward upward weekly cycle, we have had another one. The second one um, ended over on the candle of the 26th of November. So therefore we had 9 days. And now we are in a situation in which we have a new positive upward cycle, weekly upward cycle, that at the moment has reached a total duration of 6 days because the first candle we have to consider it as part of a new eventual new cycle. So here, what we can forecast for today and also for the next week is that we can proceed further to the upside because we still have a duration between 6 days, which is today's duration, up to 11 days in which we can extend the rally. So this means that we can extend the rally until the 12th of December 2024. Now, the thing is that if we consider this one as weekly upward cycle here and as well as this one, what we can further calculate is that this T plus 2 upward cycle has reached a total duration of 25 days. So given that now this T plus 2 upward cycle has turned into a positive one because um, um, first day's candle broke up the top from which it started, we can foresee more rally to the upside, at least for a median duration of 32 days up to 44 days. Nonetheless, this T plus 3 upward cycle has turned into a positive one. So therefore, we have more time even to further proceed to the upside. So T plus 3 is a 3 months cycle within a duration of 48 to 89 days. Therefore, we can extend the rally not just until end of December, but in this case, we can further proceed to the rally until 89 days or up to 89 days until, if they want to really take all the time possible, until the 23rd of January 2025. So here you see that by following this channel, you can have a really valuable insight according to time. Because no matter about the news, but high frequency trading algorithms are planned based on different mathematical parameters. Therefore, such parameters, and one of the most important one is time, because it's always a countdown, right? So here we can definitely further estimate more rally to the upside, and therefore this will be the first prominent target at $466.57. Of course, Nasdaq in that case has already broken up its relative top, and Microsoft here is a lagger compared to the Nasdaq 100. Okay, so um, in this case, we have to expect more rally to the upside until the stop. Standard & Poor's 500 and Dow Jones have already um, reached the all-time highs. So basically, here Microsoft has a good valuation at the moment. Eventually, to for um, for a total gain that until that target showed is at the plus 5%, 5.3%. Okay. Um, so here we can remove our question mark. And from this low, we can say that from that low we have at least a T plus 3, because now we have the duration, enough duration, saying that this is a T plus 3 because we have time here is 23 bars. From its minimum to this low, we have had a weekly downward cycle, slightly positive downward cycle. And from this low here until this low here, we have at 18 bars. So this is a T plus 1. Okay, so this is the updates of the chart, and therefore we can expect more rally to the upside for next week, but also until mid or end of January. Okay, so let's move to the next one. Also on Amazon, our analysis was correct because here we were forecasting, statistically speaking, more retracement rather than uptrend, and that's what exactly happened. So if we gauge the total duration from this top to this top, we have had 37 bars. I was saying in the last video that we could have had more impulse to the upside, but that was less probable compared to a retracement, because 37 bars was eating towards the maximum duration. So we had definitely less than 50% possibilities to proceed to the rally to the upside rather than the downside, and that's exactly what happened. Okay, so here we can now update the chart, saying that from this low, from this top, sorry, potentially we have also another T plus 2 upward cycle that turned into a positive one. And that's, of course, nothing exceptional. It's nothing exceptional because here we have a T plus 5 upward cycle completely positive, and therefore the expectation over the mid-term is to the upside. Mid-term means that, as for was I already cited last time, we can expect rally until at least, and I repeat, at least Q1 2025, 7 of April 2025. But of course, we can proceed and stretch the rally more towards the Q2 or even Q3, okay? Because the maximum duration is 338 days. So according to the downward cycles here, we have had 33 days. This is T plus 2. We can confirm this was a downward cycle T plus 2. And what I mean by downward cycle is the first downward cycle and the second downward cycle. Here we have had also enough days, because actually this one was a weekly downward cycle of 8 days. So here we add also the duration to close not just a T plus 2, but even a T plus 3, because a T plus 3 requires a subcycle of 3 degrees less, that is a negative one, to close the cycle itself. Therefore, this entire cycle can be definitely framed as T plus 3, 77 days. Okay, perfect. 77 days, it's towards the maximum duration, 89 days of a T plus 3, which is 3-month cycle. Therefore, here we can update the chart with a T plus 3. Okay, and we can assign the right color code that we use, which is the green one. So here, apart some retracement that will happen over time, here we can on Amazon, we can just say that we can expect more rally on the upside, at least for Q1 2025, if not even more. And this low is a T plus 5. We can confirm a T plus 5. And that's the situation we have on Amazon. It's the stock which is among the stocks that are the most in, let's say, shape, because we have already outpaced the absolute top, which is our T+5 reference, of 10%. So the rally on Amazon is stronger compared to the rally that we have seen on Microsoft. Of course, Tesla is the best one. But here, data on hand, here we have 10% over the maximum tops, whilst on Microsoft we still have 5% to go to reach the top that represent the T+5 upward cycle. Okay, so that is the situation. Not too much to say about it. Maybe on the short term, here we are at 10 days. Here we had 5 days. Okay, so maybe on the short term, by either today or Monday, we can see a little retracement because we have to close the first weekly cycle, but then we expect more to come to the upside. Let's move then to the next one. Our analysis was also correct on Apple, because from this top we were foreseeing a potentially T+3 upward cycle that is part of this T+4 that is positive, given that the T+5 here was positive since the 11th of June 2024. So in this case, we have had the first T+3, and now we have the second potential T+3. If we gauge the total duration of this T+4, though, we have 100 bars. So 100 bars, it's already more than a minimum duration for a T+4. But if we can interpret this swing as the beginning of a T+3 upward cycle, then we have a situation in which a T+4 upward cycle is divided in first T+3 and second T+3. So here we might expect more push to the upside. But you have to bear in mind that now the minimum duration is achieved, not just for the T+4, but even for this T+5, 246 days. Therefore, the risk that we have for eventual retracement, I repeat, the risk that we have for a retracement on Apple are higher, or is the risk itself is higher compared to the risk that we have on Amazon and on Microsoft. Because on Apple, the T+5 was born definitely before the others. So it was born in December 2023. Okay. So that's the difference. But of course, we still have time to proceed to the upside. What we can have, though, over the short term is a retracement for the beginning of a T+2 if they want to start a T+2. Because now, from this top that we had on the 14th of October 2024 until Thursday candle 5th of December, we have covered 37 days. And therefore 37 days are close to a maximum duration 44 days. So here we have more possibilities to begin T+1, T+2 with retracement, and therefore proceed to the upside. Okay, so that is the most probable way we can have for the beginning of the next week. So be careful. Potential retracement that over the short term can be defined as $238 or $234, and eventually 200. This is what 231. Okay, so these are basically the three targets. There's a retracement that might start already next week, can allow also to close what? To close a T+2 upward cycle. And in order to close a T plus 2 upward cycle, we would need ideally at least 4 days, a tail made of 4 days or 4 candles, let's say, that are not higher compared to this one. So whose top is not higher compared to the absolute top that we have at $244.54 if they want to start from next week having this tail. Okay, otherwise they can keep proceeding to the upside and then having the tail in the next 2 weeks. Okay, but this is the way forward. So this is what we can forecast for the next week, or the most probable, let's say, pathway. So here we can update the chart as usual. We have a T plus 2. This T plus 2 can also be not just a T plus 2, but eventually a T plus 3, because here we have more than enough time to say this is a T plus 3, because we have 64 days. So here we can put T plus 2, T plus 3. But that's what we can focus. So more enough room to proceed to the upside, but bear in mind that we have a median duration for a T plus 5 yearly cycle, as well as T plus 4 upward cycle that has reached 100 days. So eventually, if they want, or if they have an excuse, they can also start a new yearly upward cycle. Okay, so bear in mind this thing, even if we focus mm, more rally to the upside for the reason given. So let's move to the next. On Meta, we were forecasting more push to the upside. We have had the push to the upside, but we have had also this loop upward cycle that now we are about to analyze. So first of all, before jumping onto the upward cycle, let's have a look at the downward cycles. So the downward cycle from this low, we have had a T plus 3, and we closed the first cycle, positive one, after a total duration of 33 days, like a T plus 2. This T plus 2 then was segmented into the following. If we gauge the total duration from the absolute lows, from this low to here, we have 51 days. So therefore, we cannot consider this cycle, so this one, as a T plus 2, because it's too long. Okay, so now we have to frame it differently. So the first T plus 2 um, can be segmented here. So we have first a T plus 2, then a second T plus 2, okay? And we have had another subcycle that was a T plus 1. So first T plus 2, second T plus 2 plus a T plus 1. The total duration of this T plus 3 has been of 81 days, and therefore now we are on a new cycle. So let's first update the chart. So here we have at a T plus 1. We always refer the cycle on the right hand side. So if here we put a T plus 1, it's not because the cycle before was a T plus 2, but the T plus 1 started from this candle to the right hand side. Okay, so we are always defining the cycle that are coming on the right and not on the left, just for a matter of completeness and clarification. Then we have from this low potentially the beginning of a T plus 3. I say potentially because we don't have yet enough bar to say this is a T plus 3. Of course, this is a T plus 2 already, but since we have uh, 10 days, 10 bars are not enough to say this is a T plus 3, but it's a T plus 2. Okay. Then regarding the upward cycles, we can say the following. From this top here, we have reached a total duration of what? 43 bars out of 42 bars out of 44. So here potentially we have run out the time to close a t plus 2. And then what we can expect is another t plus 2. So this is the plan A. But there is also another segmentation, which is the follow. So here we have potentially the closing already of a t plus 2. And then here we have another t plus 2 that is positive. In this second case, it means that we will have less period of retracement and more push to the upside, because in this case we are at 17 bars, and therefore we can proceed to the upside until at least 16th of December 2024. In the plan A, which is the first one I showed you, then we don't have days, or we still have a couple of days, so until Tuesday next week to proceed to the upside, but then we need a retracement. Okay, now the situation is that we don't know in which of the two plans we are, because in the plan B, which is this one, here we have already the cycle developed. But regarding the plan A, we don't have anything, because this is just an assumption. Okay, so next week for Meta will be important to understand whether from this top we have a T plus 2, and therefore if we continue to rally after Tuesday next week, then we are in this situation. If we start from Tuesday onwards, or even Monday, to have a retracement of this kind, then we are in this in the plan A. Okay, so then what you need to know is to basically watch the next week and manage your position accordingly. Okay, I'm not talking about operational stuff, so I'm not giving operational insights here, because everyone has its own. But we can say that from this top, potentially we have a T plus 2 upward cycle that is a positive one, and therefore we can have more push to the upside if next week we don't see short-term downtrend. Okay, so that's the situation we have on Meta. Another thing that I also explained in the last video is that if we take the T plus 5 upward cycle and we gauge the duration until today, we have 343 days, which is more than a maximum duration of a T plus 5. Between a T plus 5 and another T plus 5, there might be a Bayes tongue of 3 degrees less, which is a T plus 2. So the thing that you have to bear in mind is that if this is a Bayes tongue, encompassed between a T plus 5 and another T plus 5, then here we have all the conditions to start a really harsh retracement. This is something that you need to be aware on Meta, okay? Not on the other stock, but on Meta, yes. At the moment, there are no sign of reversal. Therefore, this is not yet there. But time-wise, we have all the condition to do that. Okay, so our reference here will be not this T plus 5, because already we are out of time, not even this T plus 4, because we have 100, well, here we have 168 days, so it could be here we have 167 days out of 168. So this T plus 4 has reached the maximum duration, but we can also have a Bayes tongue. But the question is whether from this top we have a new T plus 3. And if we have a new T plus 3, then we can proceed to the upside at most until 89 bars, which is 13th of February 2025. Okay, so we have possibilities to proceed to the upside, but bear in mind that according to this swing on the 27th of July, and according to this candle made on the 8th of April, then we are stretching time, okay? If this is not a T plus 3, T plus 4, which for the moment it seems so, but um, never say never on the stock exchange, then we can have a retracement, okay? And such retracement can also do what? Eventually can also close a downward cycle, and such downward cycle can be even a T plus 5, because here we have first a T plus 4, then we have a T plus 3, then here we have another T plus 3, but this, let's say, it's not really enough to close a T plus 5, then we can expect more downtrend to close a T plus 5, okay? So be really aware about this option. And I stressed on that thing because at the moment it's not there, but the advantage of this channel, the advantage of our methodologies is to be predictive. So we can expect something that is not yet there, but in the light of our duration, in the light of the math, in the light of statistic. Okay, let's move to the next. On Google, in the last analysis, I was putting this top as a T plus. And why that? Here we said that that top could have been the beginning of a T plus 3, because in terms of time, we had enough bar to have a T plus 3, 79 bars. Actually, we have reached a total duration of 88 days. So the new top was done here with a weekly upward cycle. And this was the beginning of what? A T plus 3. And that's what we were expecting, right? I said that if that top of the further top within a total duration of 89 days was the beginning of a T plus 3, then we would expect more retracement, and that's what exactly happened. Okay, here we have reached really the maximum duration, 88 days. I check once again just to have the final confirmation. 88 days, and here we had our retracement or short-term downtrend. This short-term downtrend allowed the closing of a T plus 1. So here we have on that low a T plus 1. This cycle T plus 2 did not turn into a negative one because the low here was higher compared to the low that we had on the 24th of October. Therefore, we don't have the condition in which they have to return back to the extreme lows. Okay, but here we can have a first T plus 1 and then eventually a second T plus 1 that can be of this shape, can be of this shape, can be of this shape. Okay, so we will see. Um, in the meantime, here we have a T plus 1. And now, if we look at the upward cycles here, we have from this top to this top 16 days. So we have at the first weekly upward cycle closed here after 10 days. We can also put weekly cycle here 10 days. And now this upward cycle is a positive one, and because it's a positive one, we can also expect how many days we had? 6 days. Oh, okay, so the minimum duration is already there. We can proceed to extend the rally eventually for other 3 to 4 days, even if this candle is already telling us some stories, potentially the beginning of a new weekly or if not a T plus 1 upward cycle. But still, we could have time to proceed to the uptrend. But if we stay lower the stop, so lower the top at $177.71, then we will have a T plus 1. Okay, so here we can also put T weekly with the question mark, because we know that we have the minimum duration for a weekly upward cycle, but it's not given by fact that this is a weekly, the beginning of weekly upward cycle. We can proceed a little bit more to the upside. Even if here we have a T plus 3, then uh, the chances that we return immediately back to the tops here are quite low. Okay, so I would expect more a trend of this kind or a pattern of this kind eventually. Okay, so we will see in the next weeks. So for the beginning of no, for today and the beginning of the next week, we might have a little bit more of retracement, also because we can. Here we have 10 days, so we have also to close a weekly cycle. So here would say we can have such pattern eventually and then return to the upside. Okay, we'll see. If we are not immediately coming back to this top, then we can have a shape of this kind. Eventually, this retracement can also allow the closing of the T+2 upward downward cycle that has reached 30 days. Okay, so here I would expect more shorter term downtrend, 3-4 days for the next week, and then returning back to the tops. That's what I can that's what I can forecast. Having said that, last update, last but not least, here we have at 30 days, and this top is definitely a T+2 upward cycle. Okay. On Tesla, I don't have too much to say. So here we have a T+5 completely positive, and therefore we can expect more uptrend. And such uptrend can last until at least 190 days, as for the last video I issued, and therefore here we can proceed to the upside until at least 10 of April 2025, if not more, until May, June, July, etc., up to 338 days. The interesting thing is that the rhythm in which they will climb this, or they will continue climbing, because we have high volumes at the moment. We were expecting also such retracement or such little short-term retracement to close what? To close at T+1, and actually this T+1 was closed after 17 days. So perfect. Another analysis is correct. Here we can put a T+1. Then now we have to focus more on the upward cycles. Upward cycles here we have at first T+2. Here we have T+2 because here we have already enough bar to say this is a another T+2. This T+2 has reached a duration of 17 days. So here we can have a T+2. We put a question mark, but definitely it's a positive one. Here we have the confirmation this is a T+3, and we can also update the chart here. So more uptrend to come. If they want, well, if they want, here we have even the closing of the first T+2. So either we have the closing of this T+2 here, so we have already had enough retracement to close a T+2, or eventually they continue, push the price higher, and then have a little bit of a hook downwards to close a T+2. Now we have a duration of 31 days, so this hook on the downside can happen starting from next week. But here we have already the condition to close the T+2. So if this is the case, they don't even have to have a little retracement, and they continue to push further up. So of course, as a consequence, be really careful to manage short position. So if you want to really go short, you have to be really mindful, and you have to do it for a short term, because otherwise you risk really to have the uptrend against you. Okay. So that's the situation we have on Tesla, and therefore we move to the next one, which is Nvidia. On Nvidia, we have more steady state situation. So let's analyze the chart as for the last analysis. So from desktop here, we were expecting to have a T plus 1 slash T plus 2. The market gave us additional information, and from this top to this absolute top, we have added 22 bars. Therefore, here we can consider this upward cycle as a T plus 1. Okay, so now we can update the chart, and here you have basically the beginning of a T plus 1 upward cycle and the closing of a T plus 1 downward cycle that happened the week later. Okay, so here we add a T plus 1 confirmed, and this T plus 1 confirmed closed its cycle after 19 bars, so 19 days. So this was also the situation to close the T plus 2. Okay, first T plus 1 and second T plus 1. The total duration of this T plus 2 has been of um, 40 days. So from this low here, we can expect to have a new cycle, and this new cycle at the moment, given that we don't have so many bars over this top, it's a T plus 1, but we can also expect not just a T plus 1, but a T plus 2, or eventually a T plus 3. Okay, because from this low here, we have had 81 days. So here the T plus 3 is finished. Regarding the upward cycle, we have had the first T plus 2, then a second T plus 2, and then a T plus 1. So now the total duration from this top, so from the candle of the 20th of June, has been of 108 days. Okay, so 108 days, it's also a duration for a T plus 4. Okay, so here we have to be really careful from this top what we can have. At the moment, the retracement was not really harsh, I have to say. So we have already um, gained back, let's see, more than 50% of Fibonacci retracement. So now here we have to see what they want to do. So according to time, here we have 9 days. So either we continue to extend again today, or we start already today, or eventually on Monday/Tuesday to have a little retracement. Little retracement because from here we have a weekly upward cycle, so we can expect a weekly upward cycle. But then we have to understand what was born from this candle, and this candle is the 21st of November 2024. Okay, because potentially here we might have the beginning of something else. Therefore, having this back in mind, here we can put a T plus, and now we have the condition to have a T plus 1 slash T plus 2, but it might be also something else. So be careful if we do not go back to this top in next week or the week after. Okay, so if we will not go back to this top in 2 weeks, then we will have mostly a T plus 3 slash eventually T plus 4. We can always have to also double check the swings that are coming on this chart, on this part of the chart. At the moment is it's a T plus 1, T plus 2, and what I can say is that either today or beginning of the next week, Monday/Tuesday, we can have a retracement to begin a weekly upward cycle. Okay, if we start going lower this low, then this will be, or this is, it's not will be, but it is still a key checkpoint to control that this swing is something more than a T+2, okay? But without adding too much complication on it, this is what I can say on Nvidia for the next week. Let's move to the last one, which is Intel. What happened on Intel is what we were flagging out in the last analysis. So we were expecting the closing of the development of a T+2 and then a retracement. We have had actually what? A T+2 that ended up after 30 bars and then a retracement. Now, this retracement here went even lower to this point. And given that the market has given us additional information, from this top to this top here, we have 51 days. So 51 days is a little bit more than a minimum duration of a T+3. But given that we have had 1, 2, 3, 4 candles that went lower this checkpoint, and given that we did have time also to continue to the upside and start something else, here we have 80 bars. So here they had time to begin not just a T+2, but even a T+3, because it's true that after 51 days you might have a T+3, and here we have all the conditions to have a T+3. But it's also true that they had also more days. And in this case, given that we have had a retracement that was higher compared to this one, and higher, I mean that from this top to this low, we had minus 13%, and from this top to this top, we have minus 21%. Here I have to consider that in the light of the the trend that happened since the beginning of November, gave us the condition to say that from this top we have the T+3, and from this top we don't have a T+3 but a T+2. Okay, but this is something that was revealed after the 8th of November. Okay, especially the information came from the 27th of November onwards. And here we have even a condition in which, so here we have the first weekly cycle that is here, that turned into a negative one. This cycle turned into a negative, and the closing of the weekly cycle was, it's either here or here. So here we have potentially some other days to proceed to the downside, because here we have 6 days. Okay, so here we might have either today or tomorrow eventually another push to the downside. And given that this T+2 has turned into negative, here we have 25 days. So okay, so we have the minimum condition to close this T+2 and have a bounce back to the upside. But we can even proceed to the downside for 32 days. So here you have to bear in mind that we can proceed to the downtrend until a median duration, which is 16th of December, but we can also proceed to the downtrend until the 3rd of January. So be really careful now. So because the situation on Intel now is not it's not ideal for long position, but it's most favorable for short position. We have already the minimum time achieved to have a bounce back to the upside and eventually to start a T+3. But given that it's just a minimum duration, statistically speaking, I foresee more downtrend rather than uptrend, okay? Because this is already negative. Okay, so that's the situation on Intel. So I leave these arrows here just to flag out the possibility to have more push to the downside, not just for today, but also for the next week. Okay, so bear this in mind. And last but not least, here in terms of the upward cycles, we have at the beginning of a T plus 1. It's either here 13 days or there. So I would consider this one as a T plus 1. It's not, doesn't really matter, to be honest, but it's just to have a better understanding of the segmentation of the chart for the next episodes. Okay, so that's the situation. So be really careful on Intel. First target is here at $20.40, and the second one, this is a critical checkpoint at $18.51. Okay, if we also wanted to be more precise, then we can also drag a Fibonacci retracement and have another critical level, which is a little bit lower than this swing at $20.19. Okay, so if you have a question, is this the right time to buy Intel? The answer is no. Of course, no, because statistically speaking, we have more possibility to proceed to the downtrend rather than having a bounce back to the upside. Having said that, this was the last stock of this video. Hope you enjoy it. If you want to subscribe to our channel to get notified as soon as possible about the stocks, your favorite stocks, yeah, please subscribe to our channel and put a like to support our daily job. Thanks for watching, and see you to the next episode.